What is up, everybody? Welcome back to the Crypto Sherpa Show, where I read you those cryptocurrency news articles to keep you informed and stay up to date on what's going on in the crypto space. But it's Friday, or Friday, we made it. It's the weekend, and next week is the 4th of July week, so woo! So I'll be taking off going to California on the 3rd, that Thursday, and then coming back Sunday night. So I'll only be away from the club for one day that we're actually open for next week. But no, so I hope everyone has a good 4th going into the weekend or for next week. But yeah, not much news going on today. So it's going to be a quick little video. We're going to talk about how this Canadian restaurant literally started accepting Bitcoin or started a Bitcoin treasury back in the same time MicroStrategy did. So let's get caught up on where they were at, because I remember I covered that a little bit ago. We got Kraken debuted a new peer-to-peer app, IRS sending letters, and the anatomy of crypto scams. So that's what I got to cover for you today. So no need to delay any further the news. We can take a look at Bitcoin right now. We're currently sitting at 106,684. Here's that day chart. And with the rest of the crypto market bubbles, looks like it's kind of green, so not bad of a day. But let's go into this article talking about this company, Tahini's Bitcoin treasury, and how a family chain outsmarted inflation. Now, Tahini is a Canadian fast casual chain and embraced Bitcoin in 2020, leveraging to compete with giants like McDonald's. Now, here is their treasury playbook. So they did this like the same time around MicroStrategy bought their first Bitcoin. So I wonder how they're doing. So the Tahini's restaurant, a Canadian fast casual restaurant chain, specializes in Mediterranean and Middle Eastern cuisine. Now, they integrated Bitcoin into the business back in 2020 and has been refining its strategy ever since. Now, today, Bitcoin makes up over 70% of their reserves and has made a critical difference in their expansion to 62 restaurants in just over a decade. Now, they said we just kept putting more and more money into Bitcoin, Omar Hammam, CEO and co-founder of Tahini's, told Bitcoin Magazine. Omar and his brother, Ali Hammam, found the company in 2012, starting with one restaurant in London, Ontario, and Tahini's has since grown to 62 restaurants across the country. Now, their expansion amplified by their adoption of an early Bitcoin treasury strategy. Partially inspired by Michael Saylor in 2020, the bold move gave them a pool of capital with which they could compete with giants like fast food chains like McDonald's, Burger King, Wendy's, all those guys. Now, here is that tweet of Tahini's. As a small company that started in London, Ontario, Canada, we operate 4 corporate locations, 3 franchise locations, and about to open up in Ontario. We just converted our entire cash reserves that were originally used in savings into Bitcoin. Time for a thread. And as you can see here, this was on August 18th, 2020. So that's when they announced their first Bitcoin treasury. So woo! Now, they said we are competing with McDonald's and Chipotle, said Omar, adding that all these companies have more money than 100 Tahinis. So to have an advantage like that, where we have a treasury and a balance sheet strategy, that puts us in a comfortable place financially. That lets us preserve our wealth over time and space, and it was the best decision we have ever made. So these guys have not regretted adding Bitcoin to their treasury at all. Like, they have been benefiting from it. Now, the company has implemented multiple innovative strategies throughout its journey, including the deployment of a Bitcoin ATM to many of their franchises. Now, a new media strategy that, according to Ali, has netted them 3 billion views over the past 5 years across all social media platforms, including YouTube's channel with over 3.2 million subscribers, and of course, their Bitcoin treasury strategy. Now, here's a little ad from them. Tahini's Mediterranean cuisine. They love Bitcoin. Now, Ali's fascination with Bitcoin post-COVID, influenced by Egyptian currency's devaluation. Ali Hammam was the main driver behind the restaurant's Bitcoin strategy, and shaped by his family's experience with the Egyptian pound's aggressive devaluation over the last 20 years, the catastrophic consequence of a runaway inflation were deeply personal to him. Now, an experience that set him up well to discover Bitcoin during the March 2020 market crash. So I came from Egypt, and over the last 2 decades, I've seen the Egyptian pound drop probably 85% or something like that. And I've seen our family struggle. I've seen my parents struggle. My parents had money sitting in Egypt over the time, and I've seen their life savings just get wiped away. So sometimes with Egypt, it happens like a flash crash. So the government will come in and can just devaluate the currency within a month, 50%, Ali recalled. And again, this isn't this isn't just a buy to Egyptian's currency. We saw this happen with Venezuelan currency. Literally, our U.S. dollar currency already lost 10% of its purchasing power, like within these like last year, 2 years. I forgot what it was. So, yeah. So Bitcoin is a nice way to hedge against this. But when the COVID-19 market pandemic, the market panic happened in March 2020, the price of Bitcoin went from a high of $10,000 to as low as $4,000 in weeks. Now, I bought a little bit as a gimmick, and because it was just down so much, I was like, yeah, I might as well buy it. And then the more I studied it, I fell down the rabbit hole hard, which is usually happens with a lot of people. And over the next few months, I just kept buying more and more and more. And you know, those first 3 months when you discover Bitcoin, it's just like a never-ending consuming over every aspect of your life. And that is so true. He was listening to podcasts, reading books, and just buying more and more and more, Ellie explained. Now, after the crash, Bitcoin bounced back up to around $10,000, where it consolidated for months as the governments throughout the world prepared for COVID-19's responses and unleashed trillions of newly printed dollars into the global economy. Now, interest rates in the US dropped to zero, and COVID-19 support checks started to flow to anyone in Canada who filed out a form. Omar recalled that the government was just literally printing money nonstop, and it wasn't just the Canadian government. It was every single government out there that was doing it. So we knew that there was going to be an inflation problem, but the Bitcoin halving was also taking place right around the time. So in addition to the fundamental force that arguably led to one of the most impressive bull runs in its history, this was the same era when Michael Saylor famously entered the industry and became the most famous Bitcoin bull to date. However, Saylor's many speeches and documents on how to structure a corporate Bitcoin strategy and how to convince the board of directors or other business partners were just starting to hit the podcast circuit, and the Bitcoin Treasury playbook was still in its infancy. Now, once Ali was 100% in, he started orange pilling his family. So he was like, so I started orange pilling my business partners, my brother, my cousin, and then they started buying it personally. So personally, they all started buying Bitcoin in small amounts, but using the company's reserves was a far more difficult process. Ali explained that it wasn't quick at all. It was a back and forth where I want us to put the company's money into Bitcoin, and they were kind of on the edge about it. And that's just a crazy idea of how this all, it's like how they got it eventually to do it. But this and that, and then when finally they just kept back and forth it, but then Michael Saylor announced that his first buy in Bitcoin, and it set up like all the accounts of what there was just ready to go. So when Michael Saylor bought that first batch of Bitcoin, that was what pushed all of us over the cliff. And a week later, we put money into the company had into Bitcoin. So it was back and forth until Saylor announced his company buying Bitcoin. Then boom, it was like, whoa, Saylor's doing it. Let's do it. So they went right on board. Now, the acquisition price, or the dollar cost average strategy, and persistence through the bear market is what they did. Tahini's Bitcoin investment strategy differs from today's public companies, which issue stock and other financial instruments to buy Bitcoin and add to their reserves. Now, as a private company that started accumulating Bitcoin before the ETF in the US was approved, Tahini took a simpler approach: buy as much as reasonable as possible each month forever, according to Omar. And today, Bitcoin represents over 70% of the company's reserves. While their timing was excellent, having started to buy Bitcoin for the treasury at around $10,000, the strategy known as the dollar cost averaging works very well, regardless of price, even in a bear market. Now have a look at this dollar cost average calculation, for example. So here it is, a $1,000 weekly investment 2 times a week. And I believe that will be the line chart of you buying it, but there's the value of Bitcoin. So yeah, so that's actually pretty cool. So this is showcasing you like the dollar cost averaging power. You're just consistent. The amount of Bitcoin you acquire keeps going up. And then at the same time, Bitcoin's price keeps going up. So yeah, pretty cool. So if you started putting $1,000 into Bitcoin every 2 weeks at the top of the 2020 bull market, so nearly $70,000 at the time, every time you made a purchase at a lower price after that, you would be lowering your averaging purchase price. So the result is that on the way out of the bear market, in this example above, roughly $30,000, you would be at a break-even point. And that would be perfectly positioned for the upcoming bull market, Now, the only requirement is having a long-term investment mindset. So yeah, so it had to be long-term. So he started at the very top where it was at $70,000 and then kept dollar cost averaging. He noticed that once we reached that $30,000 mark, that'd be the perfect position for the next bull run. And well, Bitcoin's at 108,000 right now. That's a 3x position on everything they put into it. So not bad. Now you buy it every month and every single month. Ups and downs, I know it sounds too simple, but actually this is the only way to do it. Right? You just buy. Don't try to outsmart the system. And in my opinion, unless you're really good at this, put a number aside every single month and it just pans out. And if you think about it, if you look at the last 4 years, you would have made more than 2 to 30x your investment, Omar explained. He added that I have this conversation with a lot of people, friends, family, everybody, and I always tell them, listen, just start somewhere. Don't put a big amount and see how it works out for you, right? So let's just say you put $1,000 and watch it as a number. That's not going to be too bad. But if anything happens to it, say if next year this 1,000 becomes 1,200 or 1,500. Now imagine if you had 100,000 or imagine if you had 1,000,000, right? What would happen to that amount? Well, while there are no hard rules about the optional frequency for dollar cost averaging strategy in Bitcoin, just be it for individuals or corporations, Tahini opted for the monthly purchases, as it made sense given their accounting processes was every month. We have a P&L every month as well as we see our profit and losses, and we decide at the end of the month, okay, we're going to put this much aside, Omar explained. Now, when it comes to amounts, Omar explained that they do not invest as a fixed or a percentage-based amount. It's also about, are we investing this month back into the business? Are we not? What are the expenses like? Do we have any big payments coming up? So, sometimes you have all these expenses at the end of the year. So you have your month highs and month lows and so on. But the key is to stay consistent in putting money in. How much is it? What you have to do, decide every month. That's just it. So it doesn't matter if you're consistent with it. Just the consistency of just putting money into it is the most important thing. Now, to sell or mortgage your Bitcoin, that is the question. When it comes to monetizing their Bitcoin, Tahini has opted for a simple strategy. When the time is right and the business opportunity demands it, they sell some Bitcoin and buy it back later, as per their standard dollar cost average strategy, and then integrate the capital gains tax into their accounting flow. Omar explained that when it comes time to reinvest, you always need money. So let's say you want to do a huge marketing campaign as a franchise, right? You need to dip into those savings. And when you have money, you have power. Now, the more money you have, the more you can be free to make the right decision for the company instead of just doing what you can afford. Now, challenges with accepting Bitcoin payments and POS integration. Well, as one of the first steps in their Bitcoin integration, Tahini explored the possibility of accepting Bitcoin as a payment at their restaurant. However, a series of challenges arose that forced them to pivot. Many of these challenges remain for businesses throughout the world and involve the entrenched closed source and walled garden models of popular payment processing systems. Now, a lot of these point of sale system companies, they do their own payment processing and they just don't have the capability to accept Bitcoin in their system, Omar explained. But about the world of the merchant grade POS system, many of these systems are closed source with very restrictive APIs that Bitcoin economy just cannot easily integrate into. So it's a moat that has been an issue for Bitcoin payments adoptions since its inception. However, the friction to merchant adoption is deeper than just a POS moat. The feature list merchants need to stay competitive is very complex, and most Bitcoin payment systems today are just still lagging behind. So the POS system is not just about the payment, it's about how they build menus in the background. The POS system gives you reports, it gives you analysis of what you sold, when you sold it, what these stores are doing, what time of day they're doing business, what time of day they're not doing busy, how to ask for whatever you're ordering. It's very complicated, right? So the payment is just the last piece of the puzzle. So when we choose a POS system, it's not just about the payment system itself, it's about their functionality and how good they are as a system. Now, to top it off, POS systems that integrate Bitcoin would also have to support fiat currencies for them to be viable to normal merchants, today raising the barrier to entry and competition much further. So as a result, Tahini did the next best thing. They added Bitcoin ATMs to 10 of their restaurants in partnership with Bitcoin Well, a Canadian Bitcoin ATM company, opting to take in all profits from the machines in Bitcoin and allocating it to the isolated accounts for each restaurant. Though Ali reports that these ATMs were only bringing in about $250 Canadian dollars a month since 2021, these SAP flows, as some people in the industry call them, add up. So with the price of Bitcoin rising, each of those restaurants now have over $40,000 of Bitcoin per corresponding restaurant, a very significant balance. So that was just the Satoshis just stacking on up. But nevertheless, Omar is optimistic that these barriers will fall as interest in Bitcoin payments is stronger than ever. I think Bitcoin is really growing at a rapid pace, and it's being adopted now by a lot of companies, and people are learning more and more about Bitcoin, and becoming much more aware of Bitcoin. So I think it's just a matter of time. And how much time is that? Who knows, like next year, 2 years? We are literally living in the moments now for this adoption rate. And he said, yeah, more companies are accepting it. We got Steak and Shake. I always love going in there, using my Bitcoin Lightning wallet to pay for my meal. It's awesome. We're just going to be getting more and more of those companies be listed publicly. Right now, we're just getting tons of news about companies adding a Bitcoin treasury to their balance sheets, and that's great. It's a start. Once they realize, oh, it's getting harder and harder to get Bitcoin, we'll start accepting it as a payment option, and we will get to that point. So that is the Tahini Bitcoin Treasury Plan. This is what they've been up to. This is how they did it. This is what they've been up to. And man, that shawarma really makes me hungry. So I just wanted to do a recap. I'm glad Bitcoin Magazine did an article on this, because I remember covering it like a couple of years ago, and I was like, where are they at now? I definitely like seeing that update. So that's where this Canadian restaurant's going, and where we'll definitely see more of it. Now let's move on to our next article. No, that was a very long one. Let's play a quick commercial break, and then we will be right back to finish off these news. So be right back.
Attention visionaries and pioneers, the future of wealth is here, and it's spelled Bitcoin, Bitcoin. Introducing the exclusive Loans for Bitcoin program at the Bitcoin Ben Crypto Club, where your good credit unlocks 0% interest loans for up to 2 years, or term loans up to $250,000 spread over 7 to 12 years. Why wait? Use this capital to acquire the world's fastest appreciating asset, Bitcoin. With prices hovering around 94,000 and projections aiming much higher by the year's end, the time to act is now. Leverage isn't just for Wall Street anymore. Arbitrage the low cost of your loan against Bitcoin's explosive growth. It's smart finance for the modern investor. And privacy matters. Our no KYC Bitcoin purchase program ensures you buy and self-custody your assets in your own wallet. Your keys, your Bitcoin, your future. And as the world shifts to digital currencies, be ahead of the curve. Front-run corporations, governments, in this greatest financial revolution of our times. I'm Jay Bose, CEO of Bitcoin Ben Crypto Club. Call or text us today at 941-413-6920 and get started on that loan application. Secure your legacy. You will thank yourself tomorrow.
And we are back. So yeah, let's continue on with the news. What else is going on in the space? Well, we got Kraken, the crypto exchange, debuts Crack, a peer-to-peer payment system for crypto fiat transactions. So, all right, let's hear about this new platform they got. So Kraken's new Crack. Is this like crack cocaine? We're going to be just so addicted to it? That's what I'm just laughing about right now. I hate the name. But the Crack system will compete against other money transmitting apps such as Cash App and Venmo. So, let's see this competition. Crypto exchange Kraken has debuted a peer-to-peer payments app that allows users to send fiat and cryptocurrency regardless of the country's borders. Now, the move is part of the exchange's effort to expand its financial service offerings beyond just cryptocurrencies. According to Kraken on Thursday, the Crack app will offer users a spend and earnings account, promising yield generation on more than 20 digital assets, along with the cross-border transactions, a market forecast to surpass $8 billion in the United States this year. Now, the financial system has been stuck in the past, and we think it's time to do something about it, the Kraken's co-CEO Arjun Sethi said in a statement. He said that we believe that basic financial services should be universal, accessible, and that money should move as easily as information does. Now, the Kraken app will compete against other money transmitter solutions such as Cash App, Venmo, both popular financial apps in the US market. Cash App had 57 million monthly active users in the first quarter of 2025, generating $3.9 billion in revenue. Venmo's user base amounted to 68.3 million in 2024. According to its parent company PayPal, both apps have limited support for cryptocurrency transactions. Really, like Cash App's really the main one. Like I've helped people get on board with, but like when you're a new user, yeah, you can only buy Bitcoin on there, and if you're brand new, you can only move off 1,000 at a time. So just take that up. But they are a good option to use in case your bank doesn't like crypto at all. So they will stop you at every single roadblock they can if you're trying to go on an exchange like Coinbase, Uphold, Binance, whichever one it is, your bank's going to stop you. So a great workaround around it is Cash App or Venmo because they just see a financial app. They don't see Bitcoin or nothing crypto related. So kind of a little way to get by these roadblocks. Yeah, it's a little way to get past these roadblocks that banks put up there. The Kraken's pivot eyes its IPO. The Krak app is the exchange's latest attempt to go beyond crypto services and appeal to a broader range of users. In May, Kraken partnered with banks to launch a tokenized stock on the exchange for non-US clients. Now, the move is part of a broader shift at Kraken, following the arrival of a co-CEO, Arjun Sethi, positioning the exchange to compete more directly with crypto stock trading platforms like Robinhood and eToro. In May, Robinhood disclosed plans to develop a blockchain for European users to trade tokenized US stocks. Now, the launch of Kraken's payment apps comes ahead of a possible initial public offering in 2026. The company had been talking about an IPO for years, but Sethi recently said that it would depend on regulatory clarity for digital assets before a stock market debut. In January 2025, the company revealed that its revenue had jumped $1.5 billion in 2024 as the crypto market soared and interest in digital assets increased. Now, Kraken Payments app also comes ahead of a potential public offering in 2026. While the company has floated the idea of going public for years, Sethi recently said a listing would hinge on a greater regulatory clarity around the digital assets, and the company reported a revenue of $1.5 billion in 2024, driven by renewed investors' interest in digital assets. So Kraken has been pretty much doing pretty well lately. It looks like it. I know they got some licenses around the world. I haven't really covered those articles because they're a dime in a dozen. So it's like, oh yeah, this exchange can work in this country. So I just usually never cover it. But this one, it's like, yeah, it was a slow news day. So it's like, let's cover what's going on with this exchange. But it looks like Kraken is dipping their toes in like pretty much all of the markets. They want to compete with like Robinhood and Webull. Those are like stock platform apps. So when they wanted to tokenize like some certain stocks for non-US residents, competing with that market, and now looks like they're up against Cash App and Memo in the financial market field. So they're just really expanding out there. Let's see how they do, but keep it up, Kraken, and maybe I'll try out this Krak app once it gets debuted. Now, next up, let us talk about the IRS warning letters to crypto investors out there. It's on the rise, yeah. So what do these letters really mean? So if you got one, let's break it down. So here we go. So lately, the Internal Revenue Service has ramped up the frequency of warning letters sent to cryptocurrency investors. Reports indicate that most recipients receive one of three letter types. There's the 6173 letter, there's a 6174 letter, or the CP2000. But what do these letters mean, and do they signal a broader crackdown on crypto? Well, regulation of the cryptocurrency taxes is still something many people don't pay attention to. However, ignoring this part of financial life may be dangerous. Most vivid examples is the use of alleged tax evasion for prosecution of Roger Ver, one of the first notable Bitcoin popularizers. Now, the surge in the IRS letters frequency may be explained by the 1099 DA regulation scheduled to be adopted this year. It is the first cryptocurrency-specific tax form by the IRS. Now, some investors find the warning letters approach dismaying and feel it is a harassment, as in these letters, the IRS informs receiver that the service is aware they perform cryptocurrency transactions, and these transactions must be reported on to the IRS properly. Now, they said what makes some of these letters look creepy is that the IRS is throwing facts like, we know you own crypto between 2018 and 2020. So they're like going, we know, so you better report it. Now, at the receiver, and alleged that the letter receiver may not have reported crypto-related income properly, let's just check what these letters mean practically. So again, the types of letters out there, mainly crypto investors receive the three types from the IRS, either 6173, 6174, and CP2000. So it's one of those. But Form 6174 is regarded as the least disturbing, as it has solely an informational purpose only and doesn't require action. It is a soft notice letter, and basically it can be ignored, so don't worry about that one. But still, it signals that the IRS is aware of your involvement in crypto's investment, and if the IRS believes that the taxpayer has done something wrong, it may send more urgent letters later. Now, letter 6174 may be seen as a good reason to check if previous reports were made correctly, and 6174 doesn't indicate that the IRS is aware of any wrongdoing, just taxpayers may receive this letter if they were using US-based exchanges such as Kraken, Coinbase, Binance US, and others out there. Another possible reason is that their crypto transactions were reported by someone using Form 1099 Miscellaneous or 1099-B. Finally, the receiver's account could have been flagged by the IRS because of a third-party data match. So that's what's going on with 6174. Now, the 6173 and CP2000 letters are more urgent and require action. Letter 6173 is the letter that wasn't frequent until now, and it states that we have information that you have or had one or more accounts containing virtual currency and may not have met your U.S. tax filing and reporting requirements for transactions involving virtual currency, which include cryptocurrency and non-crypto virtual currencies. Now, this letter cannot be ignored as it's unambiguous informs a taxpayer that they have allegedly underreported their crypto income and that the IRS can do an audit. Now, the info about the taxpayer's crypto transactions may be obtained by the IRS from the exchange they use. And again, if you've been dealing with the DeFi space out there, you don't have to, as long as they don't know your crypto wallet out there, which they shouldn't, then you should be good. So that's why I usually like to, if I'm moving crypto off an exchange, I go from exchange to, say, my W wallet on my phone, from my W wallet phone to my computer. And boom, there we go. So that way they'll see what's on that phone wallet right there, but they won't see what's in my main wallet and then everything I do on that side. So they will be aware of the exchange part, and that's what you do got to just stay up to date with and report on when you have to. Now, there have been discrepancies between reported crypto transactions and exchange data may lead to a 6173 letter. On top of a complete lack of reports on crypto, the reason may be errors in reporting, such as not reporting staking or mining rewards, not applying capital gains tax on crypto conversions, and more. Now, a tax attorney can help fix the problems before the deadline is indicated in the letter. Now, the CP2000 notice includes a specific amount that needed to be reported. So the source of this letter is the Automated Underreporter Unit of the IRS, which generates due notices using computers. Given that these notices are generated automatically, there's a chance they're incorrect. So in some cases, CP2000 claims that taxpayers owe more in taxes than they actually do. Now, some forms may inform the taxpayer of a refund if the amount is correct. Now, the taxpayer may file in the form of a pay, and if not, it's better to just dispute it. Calling a tax attorney may be an option right there. But given how much information the IRS may gather is a proactive position of crypto investors and traders, and it's better to work on tax reports diligently and just be ready to respond to your IRS letters in time. Usually, this means within a 30-day period. Now, the IRS vs. Trump administration 2.0. The IRS will have more information about cryptocurrency transactions than before. That will happen this year as soon as a Form 1099-DA is adopted. Now, the pressure is rising, even as the crypto-friendly Trump administration 2.0 is planning the abolition of the IRS itself and replacing it with tariffs. In January 2025, Congressman Earl Carter proposed a bill replacing the IRS with a consumption tax, meaning that prices would rise substantially. Now, the Commerce Secretary Howard Lutnick explained that the plans to abolish the IRS and are in line with the protectionist policies of Donald Trump, and the replacement of the IRS with tariffs is summed up with the credo, which make the outsiders pay. Now, it's unclear whether Trump will actually abolish the IRS anytime soon, but the increased scrutiny of crypto transactions may only fuel supporters' desire to shut that service down. So we'll see how that takes place. But yeah, so if you guys receive letters, like especially the letter 6173, that one you cannot ignore. But if you got a letter from the IRS from 6174, you don't have to worry about that one. But again, always just report on what you have to. If you've gone through a centralized exchange, you've done a know your customer, which is KYC, you got to pay attention to that. Keep it in your tax records, give it to your tax attorney, and let them handle it. Now, when it comes to the DeFi space and everything you've done there, that's on to you if you want to do it or not. Not financial advice there, but just if you got to report on taxes, do it. Just because you don't want to have to deal with any of this hassle. Just play ball. That's all I got to say with that. Now let's move on to our final article of the day, where we're going to talk about the anatomy of crypto scams, how to stop and how to prevent common threats, because so many scams happen every single day. And I always just want to keep everyone informed on how they work, what's going on, this happened here, just so you know how to prevent any scam out there. So how do crypto scammers exploit trust, greed, and sophisticated techniques to drain assets, and what measures can be taken to strengthen defenses in the digital asset space? Well, let's find out. So in the vast world of crypto, the line between opportunity and deception is razor thin. The traits that make digital assets attractive, anonymity, independence, and rapid transferability, also create fertile ground for fraudsters. Now, scams are woven into a fabric of crypto's ecosystem, exploiting trust, greed, and fear. And unlike traditional financial systems with regulators, the decentralized crypto space allows opportunist actors to thrive. Now, understanding the structure of these scams is crucial, just as forensic investigators dissect crime scenes. Analyzing the architecture of crypto scams reveal the calculated maneuvers used to siphon funds. Each scam follows a familiar blueprint, preying on human psychology and the lack of regulation in a decentralized financial world. Now, breaking down these frameworks provides valuable insights, helping investors and institutions recognize warning signs and fortify defenses in the high-risk environment. So the hook is perfect bait for every target. Then there's the setup. It establishes trust and gains access. Then after the trust is there, is the execution, draining funds through hidden mechanisms. And then after that, the escape, covering their tracks. And then 5, how do you protect assets in crypto space? So this is basically step 1 through 4 is what goes on with the scam. 5 is what we're going to learn about how to stay protected. So 1, here's like the step 1 of a scammer's plan and playbook out there. It's the perfect bait for every target. So the first stage of any scam begins with the hook, a carefully crafted message or offer designed to capture the victim's attention and trigger an emotional response. So before setting the hook, scammers often invest significant time gathering information about their targets. They sift through leaked emails, phone numbers, and other personal information to build a profile, crafting a personalized scam to increase the likelihood of success. Now, by incorporating specific details such as the target's language or personal information, the fraudster adds a layer of credibility that creates trust. Now, once armed with their target's details, scammers move to the hook, preying on curiosity, trust, and promise of easy profits. Whether it's a phishing email, a fake account alert, or an investment opportunity promising guaranteed returns, the goal is to present something too enticing to ignore. Now, a common example is the fake exchange account scam, in which victims believe they have been given accidental access to a large sum of unclaimed money. Now, the scam begins when an unexpected message stating that your account has been created, accompanied by login credentials for an account/wallet on a cryptocurrency exchange. Now, the victim logs in and finds a balance of $10,000 waiting for them. Now, delight is replaced by greed as they attempt to withdraw the funds, but there's a catch. The system requires a small deposit, perhaps it's $1,000, just to unlock the full amount. Once the fee is paid, the scam becomes clear. The exchange was fake, and the deposit is now in the hands of the scammers, and there's no getting it back. So this scam works because it preys on greed and the allure of a lucky break. Victim becomes so focused on the reward that they ignore the warning signs such as bad grammar in the message or a lack of domain security on the website. So yeah, don't let greed get to you guys. If this happened, Again, just you should always be aware, like there shouldn't be money in an account that gets created. You should always create your own account. And if they ever say that you need to deposit money to withdraw your crypto, scam. Don't even fall for it right there. So you can get to that process of like seeing that wallet, see that account login. But the moment you try to withdraw money, if they ask for more money, just stop right there. And hopefully you didn't give them any like login credential information like a password or an email address, because again, some of these scams could also, instead of just stealing your money, could be phishing for just information about you, so that way they can use that for future scams. But let's continue on with the setup and establishing trust, and then how these scammers gain access to these people. So after successfully hooking a victim's attention, scammers focus on building trust. This phase involves cultivating a sense of legitimacy and familiarity, with scammers going to great lengths to establish a personal connection. Scammers may even employ tactics like investment scams, where they spend weeks or months grooming their victims, engaging them in friendly conversations, and find relationships to create a strong bond. Only once this trust is deeply established do they introduce the fraudulent investment or fake platform, luring victims to transfer funds that they will never see again. Now, the SIM swap attack is another devastating example whereby scammers exploit technological trust by gathering personal information that is available publicly on social media, such as birthdays, pet names, or even favorite sports teams. The fraudsters can impersonate the victim. They then contact the target's mobile service provider armed with their personal details and request a phone number transfer to a SIM card in their possession. Now, with the control over the victim's phone number, they can bypass two-factor authentication and gain access to crypto wallets, bank accounts, and emails. Now, the setup phase succeeds because scammers exploit both technological trust and personal familiarity. Humans are by nature social creatures, and scammers exploit these characteristics by building relationships that appear genuine. And in the SIM swaps, scammers manipulate trust and technology using the victim's digital security habits against them. So that's what they do. So SIM swap attacks, I think those are kind of going away because they're getting rid of the SIM cards. But still, like, you don't want to give up too much personal information out there from you, because once they have like this little information, they know it's like that security question. What was your first pet's name? And it's like, oh, what was Baxter? Oh, Granted, that's not my first pet's name. Baxter is my first pet, but not my family first pet. So there's a question on there. Baxter is not the answer. But that's what usually happens there. They build the trust, and that way, again, I see all the time people coming in here. It's like, oh no, I need to send. They're using crypto ATM, and that's usually a hard to tell scam that someone's being scammed right there, because they need crypto and they need to send it to somebody. But it's like, oh, I trust this person. Sometimes it's my husband, it's my wife. It's like, I question, it's like, are they really? So be careful with online fake people reaching out to you and everything. Now, in step 3 of their scammers plan out there is the execution, draining funds through hidden mechanisms. So once access is gained, scammers move to execution phase, where they drain funds using hidden mechanisms. This is the most devastating stage, as the carefully designed setup ends significant financial losses for the victim before they've even realized something is wrong. For example, in 2018, a victim aborted a short flight unaware that scammers had accused a SIM swap while he was offline. By the time the plane landed, funds had been siphoned from his crypto wallet with control over his phone number, and the scammers were able to bypass two-factor authentication and then gain access to everything he had. So I remember that one. I think this was like an NFT guy too. He was like on his way from Korea to, man, it was overseas when it took place, and it was all gone. But another good example is the poison wallet tactic, which targets large over-the-counter platforms. Scammers trick targets into sending small amounts of funds to fraudulent addresses. They do this by creating wallet addresses that look very similar to the initial one and final characters of the victim's legitimate address. They then send small transactions to the victims, hoping that the fake address will show up in the user's transaction history. Now, when the victim next makes a transaction, they may unwillingly select the fake address from the history. So in this tactic, scammers take advantage of automation and human errors. Bots monitor wallet balances, triggering automatic withdrawals within a balance crosses a certain threshold. Meanwhile, the uses of a familiar-looking address plays on the victim's carelessness and trust in their own records, and the stolen amounts might be small per transaction, but cumulatively, they siphon off thousands daily, all going virtually unnoticed. So yeah, with that wallet poisoning one, again, just an easy way to fix that problem is never copy your address from your transaction history. That is a numero uno. Don't do that at all. Because again, like people can send you crypto. You may see a tiny transaction and think it's your transaction. You copy it, you send the crypto over. Next thing you know, it's like, oh, poop, that wasn't my wallet address. Now your money's gone. So to prevent this, just whenever you're in your crypto wallet, click on the receive button and then copy the address. That is it. Never go through the transaction history. Always click receive and copy it from there. So that's how you can prevent wallet poisoning tactics out there. So that's just one way to stay safe. Now let's move on to the escape with these scammers. Like, what do they do next after they've stolen all your funds? So they are covering their tracks at this point. Once a scam is executed, scammers have to move swiftly to eradicate any evidence of the crime. They use sophisticated laundering techniques to cover their tracks, making recovery nearly impossible. Using mixing services, privacy-focused coins, and darknet strategies, the scammers erase any trace of the crime. Now, the methods used in the recent WazirX hack are a great example of how scammers obscure their trail of funds. And in this case, the hacker used a mixing service called Tornado Cash. Platforms like these obscure the source of funds by pooling them with legitimate funds before redistributing them. In the WazirX hacks, the hacker split large amounts of cryptocurrency to evade the detection, routing them through multiple pools to complicate the tracking even further. Now, to further disguise the funds, the hacker then used the Thor chain as a decentralized exchange that enables cryptocurrency swaps across different networks without relying on a central exchange. Now, by combining multiple services and constantly shifting funds, the hacker created a complex laundering scheme that made tracing the stolen money nearly impossible. So the complexity of money laundering methods presents significant challenges for law enforcement agencies. One effective response to these challenges was the Hansa market operation. After taking control of this darknet marketplace, law enforcement allowed it to continue operating while covertly monitoring activities. They quietly gathered the data on the user transactions and behavior, which ultimately led to the important arrests. So monitoring blockchain transactions was central to this operation, helping authorities connect the dots one by one between the illicit activities and then the movement of funds. And the blockchain analytics tools play a pivotal role here. Real-time monitoring and analysis, as offered by companies like Blockchain's Intelligence from Crystal Intelligence, enable law enforcement and financial institutions to track illicit transactions. So, and what was something from that I wanted to take apart out of this? It was switching funds. Oh yes, that was Tornado Cash. For those who don't know what Tornado Cash is, again, it's a service where, like, say you wanted to hide your transaction. You got some Bitcoin from Coinbase, and then you send it, say, to your wallet on your phone over here. And then from here, I send that one Bitcoin to Tornado Cash. It mixes it with a bunch of other Bitcoin and cryptocurrencies, legitimate one, and then sends me back still one full Bitcoin, but it's been mixed together with all these. So it's most likely not the Bitcoin I sent them, but it's been mixed back. So that's what these scammers are doing to try to hide their transaction. Because again, we can always go to the blockchain, view every single transaction, track where it goes. But when you do something like this, that kind of makes it not virtually impossible, but literally so hard to just not even track anymore. So I want to break that down for those of you that don't know what Tornado Cash was, how it works, and why the scammers use it for their protection. So it's not really protecting the victim, but it's protecting the scammer for just hiding themselves from just being traced. Now let's finish off with how to protect assets in crypto. So after understanding the anatomy of a scam, the next step is protection. So protecting your assets require a proactive approach. For individuals, security begins with diligence. Implementing two-factor authentication adds an essential layer of protection. You got hardware wallets out there, another key tool, keeping private keys offline and safe from online threats. Conducting thorough research before making any investments or interacting with new platforms is equally important. Now, On an institutional level, security must be even more rigorous as the stakes are higher and the potential targets are more attractive to scammers. Now, blockchain intelligence tools like those offered by Crystal Intelligence play a central role in monitoring blockchain activity in real time, identifying suspicious transactions, and flagging risky entities. By integrating such technologies, institutions can act swiftly to prevent or respond to the illicit activity. And furthermore, assembling organized security teams dedicated to identifying threats and implementing protective measures is critical. Now, crypto users can collaborate with industry partners, law enforcement to stay informed about the latest tactics used by cyber criminals. Or again, you can always just follow my channel because again, I'm always covering some latest scam going on for that day, that week, because these things are going on all the time. They may be different people, but it's still the same scam. So as long as you understand what the scam is, hopefully you do not fall for it. So that is the anatomy of crypto scams and how they work. I hope you got something from that, and hopefully you won't fall for any in the near future. Now, to finish things off, let's take a look at the fear and greed index. Where are we at? How are people feeling right now? We were at 50 just a second ago, but we just went down 1 point, but we are still neutral. So people aren't greedy. They're not fearful. They're just seeing what's going to go down in the market. Bitcoin's still at 1075, so we are just still holding steady right there. But it's Friday, everybody. We're having poker tonight here at the Crypto Club. So if you're in Sarasota, stop on by for our fun tournament. We'll get to play the second game. So if you want to play the Sherpa and have your chance to beat him in poker, I will be playing maybe around 9 o'clock is when our second game usually begins. But hey, first game, usually have like 2 tables. It's really fun. So come on by, enjoy a drink, enjoy the community, and just have a great time. So everybody have an awesome weekend. I will see you again on Monday at noon for some more crypto news. Peace. Love.
In a world where your data is constantly under attack, one company stands for your digital freedom. Introducing Calyx Solutions, your gateway to ultimate online privacy and secure cryptocurrency trading. Meet the Liberty Laptop. With its modified OS and advanced tracking prevention, it's your shield against surveillance. Access restricted areas, use recommended security software, and browse with confidence. Your digital footprint? Virtually non-existent. For the crypto pros, we present the Crypto Laptop. Pre-configured on premium hardware for secure trading. Optimized for your favorite wallets and exchanges. It's the fortress your digital assets deserve. Both laptops come with expert individual training and support. You're never alone in your journey to digital empowerment. At Calyx Solutions, we put you in control. No more worrying about data breaches or compromised transactions. Ready to join the revolution? Visit calyxsolutions.io and choose your perfect laptop today. Plus, become an affiliate and earn while sharing the power of digital freedom. Calyx Solutions. Unlock your digital freedom. Give us a call or text at 702-845-8276 or visit us directly at calyxsolutions.io.